All right, what's going on, ladies and gentlemen? Welcome back to our real estate investing podcast of Kwak Brothers. This is Sam Kwak, for those that don't know us, and we're just jumping on board with this podcast. We have a special guest, Mr. Mark Kohler is back in our podcast. So glad to have him back. We actually had him back in January or February, I think, and he just blew us up with a ton of knowledge. So he's here to share what's going on. We're looking at 2 more months of 2018, and it's really important for us to prepare our businesses for the tax season. We have a new tax law that was just implemented this year, lots of changes. So Mark is a CPA and an attorney, a very rare breed, I might add. He's like a unicorn out of the forest. So we have a very rare person coming to share with us.
A spotted white leopard. Is that what it is? Yeah.
So he's I mean, the things that he comes up with as far as creative strategies in tax and legal, I mean, it blows me away. It really does. So Mark has written several New York Times bestseller books, as well as he's been on several different news networks. He's been featured on different newspapers. He's truly an expert in this field, and we have him on board. So, hey, Mark, how's it going?
I'm rocking it, man. I'm so grateful to be here, and I want to say thank you to you and many of your viewers, listeners, followers that may have just hopped onto this to see what it's about. You don't know how lucky you are to have Sam holding this webinar, because a lot of basically real estate investors don't get it when it comes to how important tax and legal planning is and how much it can save you, how much it can make you. This isn't a sales pitch. There's no boot camp in Vegas that I'm pitching today. I want to give you some great tips here before year end. Yeah. And Sam, thank you for your foresight of just realizing how important this is and making sure that your followers get the real info. So thank you for having me.
Absolutely. So we're going to start right off, and this podcast is in the context of real estate investors looking to get started, or they may have already started and they're looking to expand their business. So a couple quick things. A lot of folks watching this are concerned or worried about their lack of knowledge in the new tax law. So let's get a quick recap before we talk about some of the things that you did. Real, like 30 seconds. What are the major things that you would say that real estate investors have to watch out for in 2018? And I know you have a slide prepared for us, so if you want to go right into that.
Yeah. Let's do a little slide here. And we had a kind of a. There's no 30-second answer to what we should start, really be worrying about. Mm-hmm. What we're wanting to do, and I want to make sure, there we go, looking good. This whole webinar for just 30 minutes here is about just a few year-end tax strategies for real estate investors. I've got hours upon hours of fun, interesting, creative support information that many of you want to make sure you're aware of to captain your ship. So that's what this webinar is about. So if there's 30 seconds, it's about this. Some of the books that I have out that Sam mentioned are What Your CPAs Are Telling You, Lawyers Are Liars, The Tax and Legal Playbook, Financial Freedom. I have a weekly podcast on iTunes. We've been doing it 10 years. We have over 500 podcasts, and our law firm and accounting firm. So I'm a real lawyer, a real accountant with a real law firm and accounting firm helping people around the country. I just don't teach this and then disappear or have some, mastermind group that only meets once a year and you can't participate. I'm constantly creating content with my YouTube channel, my social media tips, and the podcast. So there's a lot of free content many of you are going to be able to access immediately following this. I'll tell you how to do that. But Sam, to answer your question, and I really want this to be interactive. This is not a lecture. So here's what I kind of put together a list. Some of these have some slides that we'll go over. Some of them don't. There's so much. I could spend 30 minutes on each one of these topics or more, but I want all of your clients to understand the difference between real estate professional and passive losses. That issue before year end is critical. Which entity should you be operating under and setting up the right one before year end? So we'll take a few minutes on these first 3 that are just really critical as foundational concepts. Then we can talk about those that may need to do some last minute conversions of your LLCs, do some payroll. Are you wanting to set up a 401k before year end so you can buy more real estate and get a tax write-off to do it? Do you want to convert some of your IRA or old 401k money to a Roth Self-directing is a critical strategy in the real estate industry. Travel deductions during the holidays, paying your family members. I mean, I'm not kidding this, guys. I've got 20 plus new videos to deal with the Tax Cuts and Jobs Act. The biggest tax legislation in the last 30, 40 years.
Yeah.
And you as real estate investors are impacted by this directly. And you just think, oh, it is what it is. I'll just put it in TurboTax or my accountant will get it. No, they won't. If you don't captain your ship, your advisor will screw it up. They will be too conservative. They will not remind you. They will not tell you. This is why we have a weekly newsletter, a weekly podcast, weekly YouTube videos. And my clients are still saying, Mark, what do I do? Guys, you have got to take control of your own tax and legal planning. Not that you're going to go do it on LegalZoom or do it on TurboTax, but so you can direct your advisors.
Right.
So Sam, that's kind of what I wanted to emphasize right off the bat, is how important it is that people realize that it's not just delegating and not worrying about it. Sam, you've experienced this yourself. I know it.
Right. Absolutely. Yeah, this is super important that, as you make more money and as you buy more real estate, it's kind of funny, Mark, I got started in this business a couple years ago, and my first tax return was maybe, a couple pages long. And then this year, I didn't realize how, my tax return literally turned into like a thick booklet. It's crazy. And then to think that someone can go to TurboTax or a local small, chain bookkeeping professional, I can't imagine that. So I think as you level up your business, you have to level up your accountant to match your level of where you're at. So Mark is a phenomenal professional for that type of level and that type of accounting.
Well, thanks. Well, we're going to jump into it. I don't want this to be a high five, backslapping webinar. Let's get into it, people. So let me say this first. Let's go over to this slide here. And
did you mean to share something?
Oh yeah, I'm sharing. I'm just kind of prepping the slide.
Oh, okay.
There's so many slides that I could do, guys. I've got hundreds of slides. I can teach this for 8 hours. In fact, I have a workshop in Chicago a week and a half from now. And Nancy, can you get me the dates on those? I don't have them right in front of me. In fact, hold on, I've got it right here. So it's on the 3rd, Saturday the 3rd in Chicago, December 1st in Honolulu, and then December 8th is a live 8-hour broadcast nationwide out of Orange County, California. You can either come in person or catch it live. So there's an 8-hour presentation, $200, includes lunch. So it's a luau in Hawaii. Get a tax write-off and come to Hawaii December 1st, Sam. That's where you need to be. Okay, so here's the slide that everybody needs to get, okay? Now this is important. This is Kohler Doctrine 101. And some of you are like, oh, I've seen this before. I have other real estate companies around the country steal these slides that I have created over the last 15 years, and people see them and go, that looks familiar. Yeah, it's my slide. This is me. So, and it's cool. It's cool. I just want everybody to get the info. So here's the trifecta. People, as a real estate investor, you've got 3 lives. You've got your investment side, which is really your rentals, your self-directing, your holdings, your IRAs, your 401ks. We're going to expand this. Your left side is your operations. It might be fix and flips, commissions, professional services. There's going to be some new Trump GOP planning. We've got Obamacare to plan around. Or do you need 1 S-corp? Do you need 2 S-corps? Do you have a day job? This is your operation side, and everybody's different. Again, this is not going to be a webinar. You're like, oh, I just go do this on Turbo and I'm done. No, I'm going to recommend you get a consult before you're in with a tax attorney you trust. Spend $300-400, that's all, and get a poignant, direct, specific advice to your situation. So you've got the savings side, your rentals, you've got your operations side on the left, and you've got your trust, your family trust. That's the trifecta, the 3 worlds. Your trust is going to give you privacy protection, anonymity. We're going to create asset protection strategies throughout this whole structure and tax saving strategies. So you may say, well, what does this have to do before year end? Well, guys, if you're doing business already and you haven't structured your entity, you want to make sure it's set up for January 1st, up and running. Don't call me January 1st, because then your entity's set up February 1st. And you think, well, I can do it online in 10 minutes. Oh, no, It doesn't take, that's what you think happens, but it doesn't. That's one step of 10 steps to create an entity. There's EINs, there's state filings, there's minutes, there are operating agreements, there are bylaws, there's corporate books, there's stock certificates, and that's even with an LLC. I was just on NBC this last weekend interviewed because more and more LLCs are being pierced around the country, Sam. You would have loved this. It's on NBC. It's on my YouTube channel. LLCs are being pierced. They're not providing asset protection.
Yeah.
And people are like, well, why? I thought LLCs were great. It's because people have one sheet of paper for their LLC. And it doesn't work. Because they didn't do their minutes. They didn't do the operating agreement. They didn't have a separate bank account. They didn't put the title of the property in the LLC. They didn't do a tax return. They didn't do all these little things because they wanted to spend $50 at the state and do it themselves, and then they're effed when there's a problem. So guys, you've got to take your company maintenance seriously. We have a maintenance program for $150 a year called Becky Lloyd at my office. She'll set you up on a program, do your minutes, tighten up your LLC so you're getting the protection you're thinking about. I mean, these are just huge topics that we just don't have time for. Now, here's the strategy before year end. That's what, Sam, I know you really wanted.
Yeah.
Oh, okay. So you've got to make sure that your S-corp is taking the right level of salary. This is going to give you the biggest 199A pass-through deduction for your S-corp under the new Trump GOP deal. Now, some of you are going to say, well, my accountant will figure it out. Guys, if you don't do it by December 31st, you're screwed. And when you call your accountant and go, I got to do payroll, I have clients all the time that come to me as new clients that are like, well, my accountant said I don't have to do that. Or my client said I should take more payroll than pass through. Or they said I can just do it next year on my Schedule C. And clients get screwed over by their dumb accountants. You know, Sam, I'm teaching a conference in Atlanta in 3 weeks to 450 CPAs around the country, teaching them these same slides.
Yeah.
Guys, you may think your CPA knows this, but if you don't hold them accountable and know this, you're screwed. So what I've created is the payroll matrix. You've got to take the right amount of payroll. So Sam, if you're going to make 200 grand before year end, that's your plan. So in your S-corp, let's just say you're bringing in 300 grand in commissions and short sales and wholesales and flips, whatever. You're bringing in 300 grand after cost of goods sold and operation improvements, whatever. You're bringing in 300 grand. And then we've got 100,000 of expenses, cell phone, kids, dining, home office, computers, technology, auto, all this crap. We're writing off 100 grand and we're working it, man. We're working it. But you net 200. Well, you got to take salary. If you don't, you're screwed with FICA. So you go to your accountant and your accountant says, oh, you should take 150 grand in salary, Sam. That just cost you over $8,000.
Yeah, that's a lot.
They screw it up. So what I've created is a matrix that says, if you're going to make 200 grand net, Sam, then out of your S-corp, you should be taking a $70,000 payroll. That needs to happen in December. Your health insurance premiums need to be stated on that document, or you don't get a deduction for your health insurance premiums. If you want to do a 401k for you or your spouse before year end and go buy real estate, you got to have that done before year end. So,
yeah, so just for clarification, that is net, right? It's not gross. What's seen in the chart.
That's right. That's net. So we want to be looking at your net payroll. So now, guys, we're going to move on because we only have 30 minutes here. So here's my number one takeaway. And I've got some videos that all you can get for a few $100. You get a tax write-off for this. They're affordable. They're simple. I update them all the time. And at the end of this little presentation, I'll tell you where you can learn more. You can buy my books on Amazon right now on Prime. But I've got some, you can watch a video on how to maintain your S-corp, how to maintain your LLC. When should I convert? Should I do an LLC S-corp conversion? All of those topics are covered in my videos. And so, but here's the issue. Between now and December 31st, you have to decide, should I be an S-corp for 2018? Do I need to make a retroactive classification on my LLC? We charge $120. It's that easy. It's simple. It's cheap. But if you don't do it by the 1st and get your payroll done, you're screwed. So the next 2 months are critical. I'll give you our phone number to make an appointment with one of my tax lawyers if you want to do it for even just a half an hour. And just ask him where you're at in your situation, and people get a consult. If you don't like me, you don't like my firm, that's cool. Just find someone. Okay, now, You ready for another topic, Sam? You ready to rock it?
Oh yeah.
Here's one of my favorite year-end tips. Now this is fun. Everybody pay attention. I may have been over your head. It was a little complicated. Here's a fun one. Travel. I want to make sure Thanksgiving and Christmas are a tax write-off. Make sure that you're having your board meeting for your LLC and your corporation at Christmas time, at Thanksgiving. You have a turkey dinner, you break some bread, and then you talk about your strategic plan. I have a whole video on how to build a strategic plan for your business. Who should be on your board of advisors? I have a whole video for that. You can have a board of advisors for your LLC. Then when you have Thanksgiving dinner, it's a business meeting, not a turkey dinner. And I want you to share your strategy, your session. Meet with a vendor, meet with a client, do a corporate meeting, visit a rental property. These are all 100% write-off. Hotel, air, valet tips, rental car gas. Travel is a big one. Sam, I don't know, do you have plans for the holidays? Well, how can we make it a write-off? What do we need to do?
You know, Mark, it's funny because I'm actually getting married in about 2 weeks, and I figured out how to make my wedding a tax write-off by servicing a client at the destination that I'm getting married at. So I'm almost figuring it out. I haven't told my fiance yet, but I'm always looking for ways to take my business.
I love it. Sam, it's funny. You know, you've heard my jokes and stories about making every trip with my wife a write-off, and it drives her crazy. So it's just nuts. So anyway, here's an example. Let me give you another slide here. This is an example of how a week would play out in this situation. So your day of travel is a write-off. Your day traveling back is a write-off. The day you do business, a critical meeting, a board meeting, a conference, that's why I want you to come to Hawaii for my workshop. Then you get stuck there over the weekend. If you do business on Friday and Monday, the entire trip is a business write-off in this example. So you want to make sure that you are building a strategy for your travel around the holidays, and it just comes together perfectly. Now keep in mind, auto is different than travel. Auto is writing off your car, your truck, your airplane, your whatever, motorcycles. Your travel is your hotel, airfare, rental cars, gas, trains, subways. So this is 100% write-off when you travel for business. I'm going to talk about auto in a minute. But Sam, I don't know, do you have a quick question about travel? Anything before you're in? I just want to tell people to track it, make sure they take advantage of it.
Yeah, and just kind of speaking on behalf of the rest of the real estate investors watching this podcast, I think, those travel deductions, I take advantage of those all the time. For example, if I'm planning a vacation, I'm always planning how do I service a client or do something that qualifies for the travel deduction while taking the vacation. So my entire life has just been a one big giant tax write-off. It's kind of funny how that works.
Yeah, no, and it's true. And guys, I'm not suggesting you abuse this. And I have CPAs that follow me, ex-IRS agents that follow me, and I have them on my radio show. Guys, we want to be ethical and honest. But if you can incorporate business, I'm not saying, Sam, you were implying that. But folks, you can't write off your clothes, your underwear, your own house rent, and all those sorts of things. But a lot of your dining can be a write-off out, with Sam and his fiance when they talk business and go out to a nice dinner. That's a write-off. Now,
she's also self-employed, Mark, so this makes it all the better.
Love it. Now, I'm not going to write off picking up a pizza on the way home at Papa Murphy's for me and my wife. That's personal. We're just eating at home. But whenever I take her out to a nice dinner, a nice weekend, we're going to incorporate a business meeting. I might meet a client, a vendor. And this is why I hold workshops around the country for just a couple $100. Again, I'll give you my website at the end, people, but come over to Orange County. Go visit Disneyland for a day while you're there. Go to Chicago. Chicago is so wonderful and fun. And then even Honolulu. Do I need to say more there? Okay, now let's talk auto. Now, when it comes to auto, guys, Sam, this will blow your mind. I don't even know if you knew this. This is the year of the auto. This is the auto deduction, people, has never been better since 1976. This is how crazy it is. The auto deduction is off the chart now. So if some of you are in the business, in the market to buy a vehicle before year end, we got to talk. This is big. It used to be 90% of our clients previously used the mileage deduction. That was a big deal because it was simple, it was easy, and it just worked. It just worked for the auto. Now, if you had an SUV or a truck, it was better, still kind of a challenge, but cars was always mileage. Let me give you an example of the old rule. Luxury vehicles were defined since 1976 as anything over $15,800. Crazy.
Wow.
Now, so last year in 2017, if you bought a car for just $40,000, new or used, and drove it 100% for business, the maximum depreciation deduction for the first 5 years would have only been $15,000. Now that's maximum. I mean, if you write off 100% and you're golden, which is going to be a little rare too. And to fully depreciate the car would have taken 19 years. That was the rule last year. Now, under the new luxury limit, which is now $50,000 or more, it went from $15,000 to $50,000, and bonus depreciation of $8,000 right off the top. If you go buy new or used, this is how Trump and the GOP are stimulating the economy. You wonder why the economy is roaring. And I know some of you may hate Trump, but guys, if you're a business owner, you think it would be better under Hillary? It wouldn't have. Now, Hillary had other strengths. Both Trump and Hillary are very different. And I'm not talking about, I'm not talking about social policies or foreign policies. I'm just talking about business. Trump and the GOP have freaking thrown fuel on the fire. If you're a small business owner, the strategies are off the chart. And you got to take advantage of it. You got to love it. So embrace the good parts of the Trump plan. So you can now depreciate that car in over 6 years, and 75% of it is written off in the first 3 years. So, and that doesn't even include fuel, repairs, and maintenance. So if I went 25,000 miles a year at 54 cents a mile, my write-off would be 40,000 over 3 years. Now I can depreciate it plus write off fuel, repairs, maintenance, insurance, and interest, and my write-offs are off the chart. The write-off in the first year can be $18,000 and $16,000 in the second year. New or used.
That's awesome.
Yeah. So if any of you are in the market for a car, you got to look. Oh, anybody watch those Ginsu knife commercials? It just got better. I'm going to give you a paring knife.
That's awesome.
If you have an SUV, new or used, I can write it off 100%. 100% in the first year. Now you got to have the business income to justify it. It's got to be 100% business. But if you buy a vehicle over 6,000 pounds, look at the new Tesla, whatever 6 it is or whatever, the Tesla, whatever, that's the SUV, I can get a tax credit for it being an electric vehicle and write off 100% of it. I can buy a truck with less than a 6-foot bed, still write off 100% of it. Big truck, RV, truck, van, 100%. Is that nuts, Sam?
Yeah, this is going to, you're absolutely right. This is going to stimulate the economy, and it's definitely going to increase auto sales for sure.
Yeah. These are some of the crazy write-offs. So I just want to go up to our agenda for a minute. Let's step back for a second, everybody. I'm literally only just giving you 2 to 3 strategies that you've got to think about here. I mean, there's so much. And I'll give you my website where you can sign up for my newsletter every week. My newsletter goes out this afternoon. You want to sign up right away. It goes out every week, the podcast, blah, blah, blah. So choose the right entity before year end, possibly convert your LLC to an S-corp, maximize your travel deductions during the holidays. Now, paying your family members. If any of you have kids under age 18, over age 6, I want to make sure we're putting them on payroll. Your kids should be involved in the business. For any of you who have kids over age 18, we're going to be 1099ing them. I want to see here if I have a couple slides on this. I didn't bring any slides on paying your kids. I've got chapters in my book on this, a whole video on paying kids under age 18, paying kids over age 18. If you don't process the payments before year end, you miss it. So this is another year end strategy. The next one, and finally here in our last 5 or 6 minutes, and then Sam, you can ask me any questions. Guys, here's an important point. It's called opportunity shifting. So Sam, everybody hear me out. If you're looking at doing a fix and flip and you're worried about paying the taxes on it, if you're going to buy a VRBO, Airbnb short-term rental, and you're going to make some big money, just call me and go, Mark, how do I save taxes? And I'll say, don't do the deal. I said, don't do it. And you'll be like, what? Let your 401k or IRA do the deal. That's called opportunity shifting. And so what I want you to do is possibly set up a LLC that's owned by your retirement account, possibly you, other people. Let's form an LLC where you can self-direct a 401k, health savings account, IRA, SEP, 401k. Let's get a structure in place where you can do real estate deals tax-free or tax-deferred. This is huge. So this is called self-directing, another major topic. And if you don't do your Roth conversion before December 31st, your Roth is stuck for another year. Or your regular IRA. If you don't set up a 401k in the next month, we have a special in November. Call us. We'll give you the November special rate. Get your self-directed 401k set up in your business. And you say, well, Mark, I can do it online for free. Yeah, but you can't self-direct it. And some other bozo is going to be your administrator and charge you annual fees off the chart. They're going to make their money somewhere.
Right.
So anyway, Sam, any final comments on even the self-directing or any of this? Yeah.
So real life application, my brother and I use this concept to have raised quite literally millions of dollars of capital. In fact, we bought a 36-unit apartment building by partnering up with someone's self-directed IRA. And that particular deal, we didn't have to bring any of our own money in, and we didn't have to put our own credit down. So understanding how self-directed IRA works and leveraging it, of course, Mark and Matt, that's Mark's partner, they can teach you all sorts about the prohibited transactions, what you can and cannot do. There's a whole lot of laws. So Mark's definitely right. You can't just go out there and put together an IRA thinking, oh, I can go buy real estate with it. There's a lot more to it than meets the eye. So by working with Mark, we've been able to raise millions of dollars, literally just working with other people's qualified retirement plans. And that's honestly how we've been able to fund our flips and buying homes.
Yeah, I love it. It's so amazing. And folks, Sam and his brother, they're doing it right, and this is another important opportunity. So I'll just give you a couple final slides here that just bring this together. We've got our own sister company that took us years to set up. It's a trust company that's bank regulated, FDIC insured, so that it's not ever going to be threatened with mishandling or misuse. You can set up your own self-directed account, roll over an old IRA, 401k, do a Roth conversion, set up a self-directed health savings account, set up a Coverdale for your kids' education. All of this at Directed IRA. Just get over to www.directedira and you can open up your account right now. And the fees are one of the most affordable in the country. We seamlessly coordinate it with our law firm so you can get legal advice through the whole process very affordably. It's amazing.
That's awesome.
Finally, is this tax and legal library that I've been mentioning. Guys, I have over 60 videos updated annually, lifetime access. As long as I'm alive, they're going to be up there for you. I've been doing over 8 years now, 7-8 years. And you have tax, legal, business, wealth videos. Everything I talked about today, plus 30, 40 other videos are all there. You can start watching them immediately. Now, Sam's going to put a link down below so that you guys can just get signed up, get over there. I think it's $300, a tax write-off. And then finally, I'm going to say, people, get a consultation. If you want to just even schedule an interview to find out if our firm's a good fit, you can go to markjkohler.com, just do the contact me button, pull down. You can give us a call, schedule an interview, schedule a consult. And if you don't even work with us, it's okay. But find a tax lawyer or a lawyer that understands taxes at the least and get them to structure you properly. Going to just a plain old CPA can be problematic because the CPA is going to go see your lawyer. Then you go see a lawyer and he's going to say, go see your CPA. And then you're frustrated. All right, Sam. Well, in summary, and I know we had some technical difficulties there. Thanks, everybody. In summary, let me just say, whether you like my style or not, you can get so much free content by just signing up for my weekly newsletter, checking out the podcast, going to the YouTube channel, get educated on this to some degree, and then find a professional you trust and believe in. We do 15-minute interviews. We don't do a consultation in that 15 minutes. We're not going to give you advice, but you can interview us and say, are you a good fit? Because we get paid for our time. And so what we want to do is introduce ourselves, find out what you're about, what we're about, make sure it's a good fit. And if you're like, Mark, I want to just jump into a half an hour with any of your tax lawyers, do a year-end plan. That's it. We're not talking about thousands of dollars, people. Get with a tax lawyer for $300 to $500 and do a plan before year-end. You can call our number here and schedule an interview at markjkohler.com. Sign up for the newsletter there. It's all good. And you know, this is just so important. And I'm just grateful to be here with you. And Sam, thanks for having me. It's exciting.
Yeah. So Mark, so basically, I know for some of you guys in our last video, when we did this, they were saying, well, this is just a sales pitch. Well, let me tell you this, guys, right now that if you guys go out there and try to do this on your own, I know we were short of time, but if you guys try to go out there and do your tax and legal preparation on your own, the mistakes that you can potentially make may just cost you thousands of dollars just to fix it. And then coming back to hiring, you know, guys like Mark to fix it, that's going to cost a lot of money. So I know, you know, we're giving you guys a recommendation of Mark's, you know, services and products. But let me tell you guys right now, it's literally going to save you thousands of dollars, not only on taxes, but also, you know, making sure that you're staying protected, right? Mark was talking about how LLCs are getting pierced.
Yeah, and guys, that really hurts or frustrated. And I hope many of you stayed on at least to this point. Yeah. And you may even want to cut this in at the beginning of the video if that's what happens here. But guys, this is not just a sales pitch.
Right.
You are not going to, let me repeat, get free tax advice that really people will stand behind out on the web. Sam's not, I'm not going to do that. Sam's not going to do that, people. Right. So I'm not trying to be a sales pitch. I tried to give you tips on understanding your S-corp strategy, the 199A pass-through, how an LLC, a trust, and S-corp works together. That just exposes you to, hopefully, to learn something. Right. How you should be writing off your travel. Should you be self-directing your Roth or 401k? Can you put your family members on payroll before you're in? I met with clients yesterday. They didn't even know you could do that. Yeah. So, guys, this is not just a sales pitch. This is trying to help you understand the importance of just spending a freaking half an hour a week watching a video, reading an article, listening to my podcast, and it's going to help save you thousands. And I make it fun. I try to make it interesting. Listen to one podcast of ours and you'll be addicted. It's great. Get over there, Refresh Your Wealth. Refresh Your Wealth on Stitcher or iTunes.
Yeah, anyway. And I got to tell you, Mark, what Mark does as far as his legal and tax services are very comparable. I mean, you're going to have to pay legal professionals and tax professionals anyways. Might as well have someone who's available, right? Mark is an amazing resource to me and my business, and I'm so blessed to have him on board. I know he has an appointment to go, but Mark, we appreciate you. My brother and I love you, and we continue to support you. We would definitely like to have you come back for another podcast episode in the future.
Thank you so much. And that's next time. This was a good year-end kind of overview. You choose the topic and say, we want 30 minutes just on this, and I'll do it. You know, and then people will realize, you know, that's how quality his videos are, is that, you know, there's that much content in a half an hour that we can just hyper-focus on one topic. So,
yeah. All right. Thank you so much. And for those who are watching, again, all the resources that we've talked about will be in the description down below, link description down below. And as always, I'll see you guys in the next podcast episode. And then have a good day, guys.
Thank you.
Well, hello there. You made it to the end of this video. Congratulations. And that probably means that you like our video and you love what we did. So be sure, if you want to get more information, more YouTube videos from us about real estate investing, be sure to subscribe to our YouTube channel and hit the bell icon to make sure that you get notifications on our future videos about real estate investing.